That was nothing. Hello, my little shit weasels and shit bags and every fucking shit load across the fucking spectrum of shit. That's a new accent. We're gonna work on that some more before we use it again. It acts like that's not going to be permanently on the internet for hundreds, if not thousands, of people to see over the next coming days. Anywho, yeah, what up? It's been a minute. This video isn't going to be as personal as I would like it for it to be, as far as like updating you guys and kind of explaining where I've been and what I've been doing and all the stuff in between. And because this is my 6th time recording this. 6 fucking times, man. I can't normally fucking count to that number either. It's a fucking big number. Uh, Alfie Solomon's from Peaky Blinders, for anyone that is not familiar. Because it's my 6th time trying to record this, I'm going to try to expedite it and really cut to the chase. So, anywho, the more personal updates, explanations, next video. As a little interlude for that, this has been my child for the past, I don't know, 9 months straight, 12 to 24-hour days of just coding and coding and coding. It's been really nice to get back to my roots. I've been doing software and programming since I was about 12. Didn't really quite understand everything I was doing until about 14, 15, and I suppose it had to do with, brain development. So I've been doing this for some time, and it was never, to make money. It was because I loved it. The same thing with YouTube. But it's been nice to get back to my roots. And what better way to do that than to also merge that with your newfound love, which is finance. And so that was kind of the inception of OnlyFlows. So this is a lot to go over. I'll make it a video of its own to explain the roots to it and inspirations and all that. But in the meantime, I hope everyone has been well. And I'm just going to show a basic approach as to how I pick and not even pick, but just look for setups and how I use the platform to find the right trades. As far as the track record, this Tesla call from June 16th, I believe. Yeah, I'm already. What the fuck are you talking about? I already have an account. What are you doing? What? Yeah, I guess I gotta sign back in. But let's see, where did I put that vertical line? And then this was June 16th that we called this out. So that is an approximate 8% move. And we've been calling Tesla long and short, for the past month, pretty much. And just insanity, just how easy it's been. And I'm going to show you what I mean. But then another one was Coin. Called this out like middle of last week-ish. Yeah, coin calls looking frothy, and then this. That was on June 22nd. So go back to so about there, give or take, and that's an approximate 20% move. Not too bad. And then just recently, we did Roblox, which I don't even know why or how they're public, but okay. But we called that out last Friday. And if we go take a look at that, this was like one of the few, I don't know, mid to large cap stocks that was actually in the green today while everything sold off. And so last Friday was where you see that dip. And so the move today, I think, was about 4%, 6%. So not too shabby. And that's just a handful of dozens that I've been doing. So to kind of show what I'm looking for and looking at and how I use OnlyFlows to really pick those out and decide to act on them, I'm going to show you how I do that. So tons of features that are coming, by the way. There's still so much to talk about that I can't even show. A lot of really cool stuff, though. So anyway, in the meantime, everyone has a handful to 10 stocks maybe that they really follow and kind of know like the back of their hand. You don't need indicators, you don't need trend lines. You know, you can already tell like what it's trying to do just from a feel standpoint. So I like to start with those stocks that I have from me. So things like Tesla, Coin, Spy, um, meme stocks. I'm kind of decent at sometimes, and so I'll go with those and kind of use that as a baseline. Um, and then what I'll do is I'll start to dig into those on their dedicated ticker pages. So I can do Control F and type in down here. It's a neat little shortcut. I don't know if anybody uses it, but I love to use it. So really easy to kind of like jump between things. So here I am on Tesla. And then what I can do is I can go to the customize flow table button. And I have a couple of optics that I use. If you're not familiar with optics, the last video I think it is. If not, check the Discord. And the timestamps, or in the description, there's some timestamps, and a handful of them are dedicated to optics and how to use them and this and that. So I have some optics set up for anything where the size is greater than the open interest and anything that's $250,000 or more and is at the ask. So now I have those highlighted instead of filtered. And so now, I can gauge through and kind of see like what the presence is of calls and puts, and if they're at the ask and so on. So one of the things here is I'm seeing some Tesla puts spot at 230, 230 strike. Spot price is 238, so about 4% out of the money. And the size is greater than the open interest, and this also expires July 7th, so about 2 weeks from now. And then what I can do is, obviously you kind of want to sample the waters a little bit more and make sure that it's not just one side like that, because there's plenty of other trades going on that I should look at. But just to keep things simple, we see some puts out of the money at the ask, and I can click into the contract right here with the button on the right, and I'm going to toggle over to the weekly time frame. There are some data magic stuff going on in the background, so things might be a little slow right now. Let's see how little is. In the meantime, while that loads, by the way, load times will not be an issue again in about 6 hours while the database does some cleaning up of itself. Please? Pretty please. The new version eliminates this problem, by the way. I really want to like send it out right now, but it's not up to my spec, and it has to be a real surprise because it is. So we'll get to that in a second. Let's try that one more time. There we go. Okay. 5 years later. So we have in green is purchase volume, red is sold volume, purple is above the ask, so it's purchased but with some urgency, and then pink is below the bid, so sold with some urgency. And we can see that these puts actually have been being purchased up, relatively in bulk as of recent. Here's the monthly. Yeah, so a lot of purchasing we can see. So someone really loaded up back on the 16th, and some today, and some Friday, and some today. So, definitely need to look more into that. But even more so, that's kind of not a macro, so to speak, but kind of not intraday. It's like a swing interval that I would use that primarily. If I was intraday, obviously intraday is really important. But a lot of them being bought up, and some of them actually being sold. I guess that's kind of neutral. But what we can take away is the size of this particular transaction was greater than the open interest, and by a lot. I think it was like 2,000 that were purchased. Where did that go? I just had it. Hello? 230, yeah, 110, sorry. 110 out of 8. So definitely it's something odd going on there. But more so, if I really want to get into it, I can go to the Greeks analytics, which is by far by far the best thing that OnlyFlows has, let alone that I've ever made. This shit is fucking dope. Primarily, what I like to look at is the gamma and the delta as cumulatives. Um, to kind of explain, like really simply, it's almost insultingly simple because there's a lot going on. We're tracking to see out of all the traits going on, with the Greeks, what are being focused on. So if you're a fund, or if you're trying to really capitalize on a move in a pseudo leveraged fashion, which is options, people typically like to buy either at the money or near the money. And with that, you will have some signatures that are created. Whenever you buy a lot of things at the money or near the money, you create this footprint of not urgency, but it's showing that you expect a move to happen this way. Because if you're buying more out of the money, that that signature that you would present isn't as big. When you buy at the money or near the money, the deltas are higher, the gammas are higher, the thetas are typically lower. Technically, that's obviously dependent on implied volatility, but also your vega. Speaking of implied volatility, your vega will also technically be less, um, but at the same time could be more depending on how close you are to the money. But with all that being said, I love to look at the gamma, delta, and vega cumulative charts because this tells it all, especially the gamma. So we can see that from 9:30 a.m. till close, we had some bulls trying to push the tape, right? So the green line goes up whenever calls are being purchased. Red line goes up when puts are being purchased, and vice versa. So if calls are being sold, it goes down. Green line goes down. If puts are being sold, red line goes down. But if we look at what happened today, bulls tried to push this, and one more thing, it's not just traders, it's not just institutions, it's not just market makers. This is a giant fucking crock pot, a shit pot, if you will, uh, that you can filter. That there is some cool stuff that is coming in the next update. But it's not just market makers, it's not just retail, it's not just this or that. So you have to remember that as well. But regardless, um, bulls tried to step in, right? And we can see that green line. But after that rejection at about 258, give or take, we started to see the bulls sell and the bears started to buy. And when you see what happens next, falls from 258 till about what is that, 252. So that's a 2% move already. That was given away. You can see that the bulls were giving up and the bears were stepping in. And then as time progressed, going into about lunchtime, you saw bulls completely give up. They sold off, and then bears started to buy up, and that yielded a move of. We saw that divergence take place here at 11:45. So bulls started to sell, and then bears started to buy up, and Tesla went from about let's call that 252 all the way down to 241. It's like a 5 or 6% move right there, and it was written out clear as day with the gamma. Uh, so again, the way that you read that is you just look at what bulls are doing. Are they stepping up and buying? Are they going sideways and not really participating, or are they selling? Right, and that's through the green line, and then on the opposite side you have the bearish line. So if you see the bearish line going up and the green line going down, you know I coined that as a double bearish divergence, which is where bulls are selling, bears are buying. And that clear as day is the easiest way to execute some of these trades. And you see that, again, just fucking clear as day. Red line goes up, green line goes down. And by the end of the day, things down like 7%, I think. And, even better, you can see that with the deltas. Bears were pretty, stagnant as far as the deltas went. At open, there wasn't really much pushing of the delta. It topped out for the bulls. In fact, bears were even selling into it, which is where you can see that move take place up. But as soon as the bears started to step in, you saw these deltas on the bearish side go up, and immediately you start to see the bulls step out and sell, and you see the move again. And then the most telling, which is again, this is you have to have a solid understanding of Greeks to really, I think, use this to its full potential. At the very least, if you're not that caught up, you stick to gamma or stick to delta. When you start understanding vega and how that interacts with the underlying, you can see over here, this was the purest, cleanest version of what was going on. You saw bears buying up volatility, which is typically how you make the most money from options. As far as like the pricing model of an option, volatility is easily, you know, number one or number two as far as the appreciation rate of that option. So, and not to mention the depreciation if you get burned and play it the wrong way. But again, right off the get, you know, bears bears are buying up the volatility. It's more so going sideways actually, but because the bulls, the bullish volatility, is being sold, there's nothing more telling than when a market is selling volatility on one particular side. If upside is being sold into as its volatility, that typically means the move won't sustain, especially when the deltas, you know, aren't being bought up, and vice versa. The bearish deltas are being bought up along with the gamma. Um, but clear as day, no one was selling the downside volatility because in theory, you can assume that they're not able to define how much downside there is to come. So it makes more sense to sell the risk on the opposite side. That opposite side being the one that is probably not going to happen. The upside is already defined. That is why they're selling what is defined. That is the least risky. When you have something that isn't clearly defined or clearly calculated, that's when you try to avoid selling that because that's how you get, a feedback loop of exposure from being short. So, like, just those three charts alone, so much utility, so much power, so much, insight. And then as well, we have a version that is notional values under net flow here. So you can track the volume, the days to expiration, strike price, total premiums. This one's probably the most powerful. This one down here, the net premiums or total premiums delta. You can see right away. Bulls tried to step in, didn't get anywhere, and then everyone started buying up the downside, and that read it clear as day. Towards the end of the day, it looked like some people were trying to buy the dip, but it went against them, and you can even see that as they started to sell that, the downside just increased. Really, really powerful stuff. So this is the old version too. This is within the next couple days, this won't even be seen the same way. This will be a different layout and user interface. So we can even go through. Oops. And again with Command F, I'm gonna look up SPY. Oops. And I think SPY closed down like 0.5% or something. And again, we're doing a lot of like data crunching on the back end right now. That's why things are so slow. So SPY opened at 432 and closed down to 431-ish, so about quarter to 0.5% move. But again, you saw the bearish gamma values go up. If we look at the deltas, same thing. Looks like some people were trying to buy the dip, or maybe that was just market makers, hedging agnostically. But even the Vegas, that's probably the most telling. People are buying up the downside of the volatility, which makes sense more so for like an index, just because indexes are priced differently than their underlying, and people typically will hedge with the index while they go short on the underlying. So that can be a tough read sometimes. But then going over to the net flow, especially the total premiums, I'm sure that'll paint like a crystal clear picture. Okay, mic died. Yeah, people are just buying up the downside on SPY. Um, And what's one more we can do? Actually, no, I'm going to cut it there because we're on 20 minutes. So real quick, that was just a really brief kind of intro as to how I use OnlyFlows. There's still so much more to talk about, and so many more features that I want to show, but I shouldn't. We'll do that tomorrow. We'll do the new features tomorrow. Um, but in the meantime, if you're not subscribed, feel free to join. OnlyFlows.app is the website. Um, a lot of really awesome shit coming. That's just around the corner. Um, yeah, so I'm just gonna leave it at that. Thank you all for watching. If you have any questions, leave a comment. Join the Discord. We're still running the $4.95 a month promo, so that that won't be long. That will not be around for long. I'm just gonna leave it at that. Uh, Lots of really awesome stuff. So thank you all. Appreciate you. Um, See you in the next one. Stay black.